Point Trading YouTube channel. My name is James. I run the pro analysis classes each and every Saturday. I will say that this is going to be a very shorthand sort of version of what I have just sat down and recorded. The class this weekend, it went for 1 hour and 30 minutes. A lot we recapped in regard to not only these three major indices in the top left-hand corner of my screen, we also went through some arbitrage opportunity on the Russell 2000, and then of course to a lesser extent on the Dow Jones Transportational Average, right? This is obviously in respect to what these market indices, largely or namely anyway, the S&P 500, the Dow and the NASDAQ are currently doing. Have a look that since, of course, the breakout that we established in this juncture just here, the markets themselves have been on an absolute skyward rip. And if you've been listening to this analysis, right, for the past number of months, maybe, who knows, potentially a couple of weeks, or if not, there are people here who've been listening along and participating for a number of years, you will understand that really for the entirety of 2019, our strategy has been, all right, to accumulate SPYQ, Dow Jones, of course, or at least diamond positions as well, prior to this exact moment in time, which is really now just over a month ago. All right, so we've been very patient in the accumulation of those positions. And as such, as still a lot of people unfortunately remain bearish on these markets, this is really the payoff period. If you find yourself feeling as though you've got the fear of missing out, do not feel that this is the sort of the end of the parabolic sort of blow off breakout that we're sort of enduring at the moment. It's very much so, in fact, towards the beginning of this. It's very much in the infancy of this breakout. So again, a lot of emails that I have been receiving anyway over the past, I'd say really 3 weeks since this breakout is, well, look, I may not have the largest position, or I may not have sort of allocated my entire capital account. What do I do? What I've done in the video just gone. And also, if you were curious about options as well, pretty decent segue into options, I've really sat down and sort of drilled into at least a couple of things of what you should be looking for as an option buy, and also things to really be, or at least not to be doing as an option buy, and interrelating it into currently where the market sits, and of course where we expect it to move, not only for the remainder of 2019, but largely for 2020 as well, which I believe is going to be another very profitable year for those who are still long orientated in the market. And sort of pushing to the side anyway, some of this bearish market noise that still continues to sort of linger out there. There's going to become certainly a point in time where, again, the masses simply just jump on board with this breakout, this most recent breakout, because they've really got no other option left, all right? They're probably looking at this still a little bit hesitantly, a little bit cautiously, but the higher this market goes, it's going to just simply draw in a lot of the emotional sort of state of, or at least the public participation in terms of those sort of sitting on the sidelines, which is really going to sort of add to the fuel which is currently pushing these prices up. Very quickly, I will say, all right, very quickly, I will say, this is public information, by the way. So again, this is not only privy to that pro analysis class. I will say, by the way, if you're listening to this analysis and you value this analysis and you feel as though you're learning, all right, key sort of concepts from this analysis, or at least you might be sitting there saying, well, how does he do this? Or how is he getting the direction right in picking at least the markets, or at least these individual shares as well? I would like to invite you into that pro analysis class. Email me, or below this video, there's a pro analysis link. Sign up, have a look at it, okay? It'll essentially give you a month's activity for that one payment. You'll be able to see again in greater detail, right, the actual analysis when it comes to, right, the individual stocks as well. So this is a very sort of broad overview of the markets, generally during the week as well, unless we see something major happen. It's just going to be forward-looking, or even mostly anyway, back-looking or retrospective analysis. However, in that pro analysis class, it's forward-looking into the week upcoming, which is very important for those of you, all right, or for everyone really, as we move into every fresh new week of trade. So tremendously valuable in my opinion anyway, and it's there for those who want to at least unlock that resource as well. But again, going back into what I was just previously talking about before I went off on a tangent, the S&P 500, no surprise, the target, it still remains at 3,175. If I can push the right key on my keyboard, really it's going to be a race between, well, is price action going to hit this target, or is the ADX going to top out at roughly that 50 point as it does historically, right, if you look back. So that's really what we're sort of toying with at the moment in terms of this bull trend continuation. When you go into the NASDAQ as well, again, We've still got the target up here. This is a measured move, by the way. This is the measured move of the first wave oscillation of this symmetrical triangle. And this is giving us the projected breakout target of 8,900 points. However, we are mindful that the ADX itself, which again sort of shows us just how overextended a trend naturally is, it's a little bit different to the application of the exponential moving averages and also the simple moving average, and also more importantly to the oscillating averages. We're sort of juxtaposing the ADX against the target itself in relation to price action. And that's really giving us, well, is that when we're going to see that actual intermediate true pullback at some later date? So again, be mindful of that, but at least you've got the targets, at least on these two indices. Again, I've referred to to the Russell 2000. That's where I believe the real market arbitrage is at the moment. A really nice holding pattern up and around resistance area, and a really nicely defined target area, which is past resistance. Okay, and that's just really on the precipice of breaking out as well. Pay attention to the CCI and also the ADX on the Russell 2000, or just write RUT 2000. You can bring that up on your own chart as well when it comes to the actual charting of the index itself. But really, that is a fantastic trade that's just brewing away. Now, very quickly, when it comes to some of these individual trades, Netflix, again, is really brewing. You can see that it's continuing to move sideways. It seems to be building a little bit of a foundation here. We're towards the top of this range. So if you're looking at the actual support range and the resistance range, it really looks to be sort of bubbling. And if you pay attention to this closely, you can see those Bollinger Bands are certainly sloping to the upside. So I'm interested to see. I think that Netflix is going to pop relatively soon. And when it does, I'm still looking at this moving up to 361. More analysis again. In that class, I just sat down with people. It is recorded. It is up on the website. It will remain there probably to mid next year, as do most of the videos on that pro website. They just simply sit there. So you can go back and have a look at months and months and months and months of analysis. But drumming on into Microsoft. Anyway, the 146.31 trade trigger is looking pretty good at the moment. It's closing up here just shy of 150. We've been very bullish on Microsoft for an extended period of time. And I really sort of tried to bring this into perspective, is that over the past 4 months, we've just been moving sideways in a relatively tight trading pattern. We've just broken out of that trading pattern, and now we're beginning to trend. So this is all of the benefits of holding those positions, or at least beginning to buy into recently anyway, Microsoft positions through the use of calls, ideally. And this is just the beginning of the breakout of that trade, a really nice trade there. Now IBM is coming back down to retest that support area. We've got measured moves on this symmetrical triangle as well. And if this support area holds like it has done, going all the way back to essentially April and June of 2019. As you can see, it held again in October. Here we are retesting it in the period of November. If we see a wave rotation up and we break above 142, we've really got some nice risk and reward ratios on that potential bullish trade. So that's really exciting as well. We've got Google as well breaking to the upside. We started buying this down here at 1,214. Yes, we had earnings. We had to close it out. But then again, more recently, 1,277. 1,301, and the third entry has been 1,325. We're closing up here. I like this number, as I said in pro, 1333.54. So I mean, this is a very profitable trade already, and we're just breaking out of resistance, similar to what we've done, or at least Apple's leading this market higher. It sort of overlaps quite nicely with Microsoft. The one irregularity to this whole sort of jigsaw puzzle at the moment is the price action of Amazon, which we went into great detail with over the weekend. Again, this is a major surprise. Disney breaking above 140.42. You can see it's up here at 144.67. That surprise anyway happened on Wednesday, and I mean, it sort of came out of nowhere. But if you had that contingency set, you've done tremendously well on that stock. We're just looking for that to continue over the coming weeks as well, which is fantastic. COP pulling back down. We've got a couple of triggers set on this. The analysis of this, by the way, is fantastic. When it comes to the foundation of this stock and what to expect moving forward, I'm very excited about that trade over the coming months, okay, as we move into 2020 as well. That was a fantastic stock to have actually entered into, and it's poised very nicely for continuation to higher prices, all right, for a number of reasons that we went into detail. We've got Caterpillar pulling back a little bit. We've been very bullish on this back as far as 120.39, okay, all the way back in the period of August, September. That's where we started to see the exhaustion of the bearish momentum. Then we started to realize, right, the higher lows that were establishing itself, and now we're printing a series of higher highs. So this is essentially a trend change. On top of that, we've also broken above that of the declining resistance area as well. So it's sort of, I mean, certainly we've got the trend change, all right, the direction of that has been set in stone. Now it's just a matter of, are we going to see a definitive pullback? These are all bullish trades, by the way, at 140.96 and 145.06. Got the re-entry set as well, But what would be a major blessing for a lot of people is that if we do see a pullback, the opportunity to re-enter it into that stock again, and that's something we've spoken about. Baidu, gone parabolic after earnings. This just looks like a bull flag. So you can make sense of that if you've been listening to me speak about bull flags. You can interrelate this or tie this into the simple moving averages, into the exponential moving averages. But again, that stock here, I mean, we've been waiting for that reversal to happen. Again, you can see the series of higher lows reversing. You can see the series of higher highs. Also, we've been in a pattern of just complete exhaustion to the downside, similar to Amazon at the moment. This was a basing pattern, i.e. similar to Amazon at the moment. We're just starting to get moving. So once we get, or at least break out of that bull flag, that stock's going to go parabolic as well. Now, Boeing Airlines, this is interesting. The 362 was more of a definitive entry. There were a couple who got in at 351. Is it any surprise to anyone right now that as we look at these individual companies, that the majority of them are moving in the bullish direction with the overall markets? It is critical to unlock, right, the analysis behind the market indices. That is what we do, which sets the foundation, right, for a bunch of these individual trades. So even if you're looking at bearish trades at the moment, right, they're certainly going to be affected by the market in its current trending state. Do not, in my humble opinion, trade bearish. With bearish trades, you are playing with fire in the face of this bullish market. It's really as simple as that. But we're closing up here at 371.68. And as I say that, it appears as though my Navigator software was about to fall asleep on me. I'm just leaving it and it's come back to life. Fantastic. The one disappointment that we've had has been Amazon. Amazon itself, and people are simply just looking at these candlesticks here. But if you look at this in more detail, to me, it looks like we've got a double inverse left shoulder. This is the head down here. And now we're coming back to retest the second right inverse shoulder as well. We've got a definitive neckline up here. Okay, just here. I should color coordinate this and put it in blue. But if Amazon fails to push really substantially below Friday's low, and certainly if we fail to move below this candlestick or this candlestick over here as well, this right here is going to be, right, that next subsequent higher low, which will retest and establish, right, the successful back test, the confirmation of that secondary inverse right shoulder. And it will also coincide with the breaking out of this sort of pseudo bull flag, which will then just confirm the complete, right, bearish momentum exhaustion that we've been picking up on since August of 2019. So again, I understand it could be sour grapes in the mouth right now with Amazon. I get that. Personally, I'm in this as well. But if you've got enough time expiration and if you've got the right strike price, maybe it's gone from in the money to out of the money, right? I'm still very much optimistic on this trade, and I'm still looking at Amazon popping when it chooses to do so and moving back into synchronicity with Apple, moving back into synchronicity with Google, moving back into synchronicity with Microsoft as it generally does. Your target on this is up here at $1,970. So from a risk and reward perspective alone, not even taking into consideration the actual technical component of it, it is a fantastic trade setup still. All right. Now, final stock as well, you can just see the amount of positive stocks that we have had in this list is Apple. I mean, take your pick at the entry prices. I have to go all the way back as far, literally as December, January 2019, when we first placed the bullish entry at $149.94. This is documented back in YouTube. All of these bullish trades are documented. Right, certainly in the pro analysis classes as well. We never change the actual open orders unless we delete them. All right, just simply because we've got too many entries on the chart itself. But these are all bullish entries. We've been in the right direction of the trade for the entirety of 2019. And you know what? We were actually on the right side of the trade in Q4 of 2018 as well, trading up into the peaks over here where I started to alert people that this was it, right? That we were moving into that correctional type of move. Here we are in Apple again. This has been one of my favorite stocks to personally trade. But again, I cannot sit here in good faith and say, look, enter above the highs of Friday's candlestick come Monday, right? The entries are in the sort of in the past. More recently, 256 and 261. You should just let this run, let this ride. And we're going to use this in conjunction with the market indices pushing up into those highlighted targets, which are the measured moves of the breakouts of these consolidational and also continuation patterns, whether or not they're actually ascending triangles or whether or not, or at least at least applicable to the NASDAQ, that of the symmetrical triangle, you've still got the measured moves, all right? They're sort of, they're very similar to one another, even though they are pseudo different types of actual chart patterns as well. So I'm going to leave it at that. please, if you want more analysis, if you like the analysis, if you want to learn more, have a look into that pro analysis class. You'll learn a lot more than what you will in this public forum here on YouTube. Apart from that, everybody, I just wanted to say, enjoy your weekend around the world. I'm going to sign off now and take the day off essentially on Sunday. So please enjoy your weekend as well. And I'll be back with you during the week for some more market updates. Just very quickly on a side note, the reason why I was relatively quiet for the week just gone was because simply we moved sideways for the majority of Monday through Thursday. And then Friday we got the pop. And then Friday obviously coincided with the weekend class I do each Saturday. So I put one out on Monday, snooze fest through to Thursday, pop on Friday, recording on Saturday, right? That's just the way the week went. So I think that's probably common sense, hopefully, to the majority of people who listen to the YouTube channel as well. So everybody, enjoy your weekend. It's James signing off on Pivot Point Trading. I would love to see you. And also I'd love to see and hear and receive some email feedback as well, or even in the comment section below. All the best. Farewell.